Hey guys, it's Envy Trades, and in this video we'll be going over phases of market delivery and how to align yourself with IPDA market cycles. And we're going to take the IPDA cycles and apply it onto the charts and look at real life examples. So let's get straight into it. The first phase of market delivery is expansion. All an expansion is an inefficiency that draws towards a strong drawn liquidity. And as you can see, this expansion leg is just a bunch of green candles with barely any red candles that are shallow pullbacks. This is an example of an expansion. As you can clearly see, we have this nice expansion towards this 1 hour swing high. And expansions are caused based off inefficiency in the market. As you can see, we're barely having any retracements and we're slowly just pushing up higher. The next phase of market delivery is consolidation slash retracement. Now, a consolidation is an accumulation of orders before an expansion phase, something like this, where we just accumulate inside of the range. And a retracement is an accumulation of orders back into the internal range of liquidity after an expansion phase. As you can see, we had this nice expansion right here. We have the short-term retracement back into this ERL. We react off this ERL and keep pushing higher. The last phase of market delivery is reversals. All a reversal is a reversal of a trend after a higher time frame drawn liquidity has been met. As you can see, we have this consolidation, then this expansion. We tap into our higher time frame drawn liquidity and we reverse from that area. Now, to dig a little deeper into reversals, we can look over the three conditions we need. And so for the first condition of a reversal, a higher time frame IRL or ERL must be swept. As you can clearly see, we have this daily fair value gap right here, and we sweep out these lows, which is also this ERL. The second condition for a reversal is having SMT at those lows. SMT must be present at that POI. As you can clearly see, this asset taps into this daily fair value gap, while this asset fails to. As you can clearly see, this is the same example, just on the lower time frame, and we can see this is our hourly change in the steady delivery that confirms the reversal higher. Now, the number one thing to understand, is it a reversal or a retracement? So we can take a look at this retracement example first and teach it to you in simpler terms. So we can take a look at this price leg right here and analyze this chart. So after this SMT, this higher time frame drawn liquidity, and this hourly change in the steady delivery, we get a reversal being confirmed. So after that reversal has been confirmed, we get an expansion move higher. After that expansion, we see a strong retracement. Why is this not a reversal? We cannot assume a reversal can occur until the daily external range of liquidity has been met. Price cannot reverse. So after this expansion off that reversal, we come to see this short-term swing right here. Do we expect it to reverse? No. And why is that? Until the daily external range of liquidity has been met, price cannot reverse. So until a strong point of interest has been met, like this daily external range of liquidity, we're not going to assume that this swing point is a reversal swing point. And as we know, price can never reverse from a consolidation slash retracement. So in this case right here, our drawn liquidity is still the daily external, and we're not going to be trading a reversal. As you can clearly see, we treated this as a retracement. You can take an entry off this change in the steady delivery. As you can clearly see, we get this nice expansion leg off this consolidation. And understanding that price is always going to retrace unless it has tapped its higher time frame drawn liquidity. And now we can take a look at a reversal example. So we can analyze this chart right here. We have this nice expansion here, and we're taking this as a retracement. Why? Because the daily fair value gap has not been met, and that is the higher time frame drawn liquidity. The reversal cannot occur without a higher time frame IPDA, so we would wait until the daily fair value gap is engaged and treat this as a retracement leg. And now we can see we tap into that daily fair value gap. And the second step is always looking for that SMT. Now that we tapped into the higher time frame IPDA, we have this SMT. We would look for the third step in order to engage ourselves with this reversal. And as you can clearly see, we have that 1 hour change in the steady delivery off that daily fair value gap with that SMT. And for me, this is the reversal being confirmed, and you can enter off this. And this is not a retracement leg to push higher. And this is the aftermath of that reversal actually playing out. You can clearly see this was the retracement leg after we met our higher time frame drawn liquidity, and we saw that SMT and that hourly change in the steady delivery. We had that reversal and not a retracement. And with this phase of market delivery sheet, we can clearly see that off the consolidation, we always expand. We can never reverse from a consolidation, as the consolidation will never meet the higher time frame drawn liquidity. Therefore, a reversal cannot happen unless that consolidation is done. So after that expansion, you have to ask yourself, has the drawn liquidity been met, or have we left a failure swing to that drawn liquidity? And if that drawn liquidity has not been met, we can assume to have a retracement. and then an expansion off that retracement. Now, if that draw on liquidity has been met, you have to wait for the reversal conditions and then possibly trade that reversal back down to the opposing side. So now we can take a look at how to apply these on real life charts and show you how you can top down analysis using phases of market delivery. So now we're on the higher time frame here, and we can clearly see we had this nice consolidation up here. Off that consolidation, the higher time frame trend is bearish. So off that consolidation, we have this nice expansion leg, the bearish expansion leg. So after seeing this consolidation and this expansion leg, we can apply some other concepts as ERL and IRL. We sweep out this nice hourly ERL, and off that ERL, I'd want price to tap into the IRL, which is this hourly fair value gap, for a short-term retracement and then a continuation lower. So for something like this on the higher time frame, and to continue lower with that expansion leg and that small little retracement leg. Now we can go down to the lower time frame and look for a possible entry. You can see how this actually does play out. So we do tap into this gap. Now ideally, I'd be waiting for price to show some sort of SMT and a strong change in the state of delivery. So until that reversal condition has actually been met, I'm waiting here and being patient. As you can clearly see, we do have an SMT right here with ES. This is the NASDAQ. NASDAQ fails to take this high while ES actually takes this high. So we have that 1 and 2 reversal condition met. Now what is the third and final condition? It is a strong hourly or aligned time frame change in the state of delivery. And as we can clearly see, we do have that here, right? The 5-minute change in the state of delivery with the SMT, as this is an hourly fair value gap. So my entry would go somewhere here. We can limit order this actually. Limit order this right here. Keep our stop at that SMT protected high and target these lows here. Or we could even target further, but I'll target this external range of liquidity right here. And this is basically on the higher time frame, playing that expansion right off this consolidation. This is the short-term retracement, and then playing that expansion lower. So now we can go down to the lower time frame and see how this trade actually plays out. So as you can see, we don't actually get tapped back into in this limit order, but the entry would actually be on this candle right here. We missed out, but this trade did play out very nicely, and it did expand towards that external range of liquidity and following the phase of market delivery. Why was this not a reversal? A higher time frame draw on liquidity was not met. Therefore, this was just a retracement back into the internal range of liquidity for us to continue back to the external range of liquidity. So now we can take a look at another example right here. As we can clearly see, price has just been in a consolidating range, but luckily for us, this is also a higher time frame drawn liquidity right here. So this is a daily external range of liquidity, which is also a weekly fair value gap, and we can look to possibly seek a reversal if the reversal conditions have actually been met. So we sweep out this higher time frame ERL, and now all we're going to be looking for is that lower time frame SMT and that higher time frame change in the state of delivery. And as we can clearly see, we have an SMT at these lows, as after we swept out this daily external, we came back into sweeping it, but this time we formed an SMT with ES. So after seeing that hourly SMT and that daily external range of liquidity, you can clearly see we do have this change in the state of delivery right here on the hourly chart. So we can go down to the lower time frame and actually seek an entry. I'm on the 15-minute chart, which is also a stronger confirmation. And my entry right here would be this fair value gap plus this breaker block, which would pretty much also be a change in the state of delivery entry as well as a unicorn entry. So I'm very confident in this trade. All we would do is pretty much long off this and anticipate that reversal. So we'd keep our stop at that S&P protected low and target a nice 2R, and we can see how this actually does play out. As you can clearly see, we have that reversal off that daily ERL, and we tap into this higher time frame drawn liquidity. So we can take a look at another example right here. As you can clearly see, we have this nice expansion leg, and then we have this consolidation. Now, for me, I would not anticipate a reversal, even though we have a higher time frame drawn liquidity met. This is a monthly ERL. Now, to anticipate a reversal, the conditions must be met. If the conditions are not met, you take it as a reversal even after sweeping the higher time frame drawn liquidity. Now, you guys might also notice that after sweeping that higher time frame drawn liquidity, we might not actually reverse and we just have that consolidation and continuing higher. And this is why I stress it so much, that until and unless the reversal conditions are met, consider the delivery of price a consolidation. So even after seeing this, I'm not going to anticipate that this is a reversal unless we see a strong candle body closure and a strong SMT. All those things are just a filter for anticipating a reversal. Without me seeing this, I'm just going to anticipate that this is a reversal, look at these internal range of liquidities as a retracement, and for price to continue higher until those reversal conditions actually present themselves in a future date. We have that daily internal range of liquidity that we tap into. We do have an SMT with silver with this low, and we have that strong change in the said delivery. So what is this? This is a lower time frame reversal, but a higher time frame retracement on the daily chart. But this is a lower time frame reversal on the hourly chart. So off that SSD, you could get into a lower time frame entry. But let's say you do want to swing this, you would keep your stop at this SMT protected low and target a nice 2R or this external range of liquidity. So we can see how this plays out, but it's very important to understand that a higher time frame retracement, a retracement on the daily chart, can be a lower time frame reversal. As we know, price always goes from external range of liquidity to internal range of liquidity to external range of liquidity. And as you can clearly see, we get that nice distribution towards that external range of liquidity. This example isn't really a trade, but this is something very, very cool, and it actually shows the phase out market delivery in real time. So this is the gold chart here on the weekly time frame. And as we can clearly see, this is pretty much the historical time frame for gold. And around this area, we can see how price actually moves, right, with that phase of market delivery. So if we zoom in a little closer, we can clearly see after all these expansion legs, we have a short-term retracement or short-term consolidation, had that retracement, and then an expansion. And because we know time is fractal, right, on the monthly time frame, we're having a short-term retracement that looks like this, and then a push higher. As you can clearly see, we have these pullbacks, these expansions, these pullbacks, and on the higher time frame, we have this nice little consolidation, then that expansion. Now, these phases of market deliveries can be shown on any time frame, and it is very important to understand and recognize what phase of delivery you're actually in. So if we zoom in a little more, you can clearly see from February to April, we have this nice expansion leg. And what are we doing right now? We're consolidating. Now, could we possibly reverse from here? We can possibly reverse from here because we have this hard time frame drawn liquidity that was taking out, which is the all-time high. Now, unless you see an SMT, a strong candle body closure, and some sort of fundamental news with gold, then you could possibly anticipate a reversal. But on the higher time frame, on the monthly, the 3 months, maybe the 6 months, this is just a short-term retracement for price to continue just going higher and higher. So I hope you guys enjoyed this video and you actually learned the order of IPDA cycles / phases of market delivery. This is one of the most important concepts, and it is very important to understand if you are in a consolidation, an expansion, or a reversal. And now if you want this order of IPDA cycle sheet, this really helps me on the day-to-day, understanding that if we are in a consolidation, we cannot have a reversal. So if you actually want this sheet, you can join my Discord, and it is in there for free. So until next time, guys, I'll see you in another video.